Welcome to my channel Sparkle Mind. Students, in this video we will see solution for CBSE additional practice question issued 23-24 academic year. இந்த பேப்பரில் சிபிஎஸ்சி இஷ்யூ பண்ணின அடிஷ்னல் ப்ராக்டிஸ் கொஸ்டினுடைய சொல்யூஷன்ஸ் 6 மார்க் கொஸ்டின்ஸ் பார்க்கலாம். இது பார்ட் 2 ஆகும். பார்ட் 1 முன்பே பதிவிடப்பட்டுள்ளது. Questions from 23 to 26 and 34 carries 6 mark question. So 23 பார்க்கலாம். Question number 23 or question. Pritham Limited invited applications for issuing 1,20,000 shares of 10 each at a premium of 3. The amount was payable as follows. On application 4, including 1, and allotment 5, including 1, on first call balance. Here, we have to find the first call amount. The amount was payable application 4, including 1 premium. Therefore, application is equal to 3 plus 1. And allotment 5, including 1 premium. Therefore, allotment is 4 plus 1. Then already given par value of share is 10 rupees and premium is 3. Therefore, total shares value 13 rupees. 13 rupees application 3 plus 1 already given. Allotment 4 plus 1 already given. Therefore, balance 3 plus 1, that is 4 rupees on first call, first and final call. Then applications of 1,80,000 shares were received. Allotment made as under. Applicants of 90,000 shares allotted 80,000 shares. Applicants of 50,000 shares allotted 40,000 shares. Remaining applications were rejected. Here we have to see one thing. 1,80,000 shares were received. Out of these, 90,000 shares were allotted for 80,000 shares. 50,000 shares were allotted for 40,000. So far, 1,40,000 shares applications were allotted. So balance of 40,000 applications here rejected. Rookie, an applicant of 4,500 shares out of group applying for 90,000 shares, and Mukti, the holder of 6,000 shares out of group applying for 50,000 shares, failed to pay allotment money and the shares were immediately forfeited, and later on reissued 8,000 shares at rupees 7 per share, 6 paid up. Reissued shares included all shares of Rookie. Pause necessary journal entries in books of Pritham Limited by opening call in arrear account. So, journal entries in the books of Pritham Limited. First, journal format, date, particulars, here ledger folio, debit and credit. First, bank account debtor 7,20,000 to share application account 7,20,000, being application money received for 1,80,000 shares at rupees 4 per share, including premium. Then share application money is transferred to share capital. Share application account debtor to share capital 3,60,000 To securities premium account 1,20,000. To share allotment account 80,000. To bank account 1,60,000. That is, this one is rejection. So share capital 1,20,000 into 3 to securities premium. Here all application is 3 plus 1. Therefore 1 rupee goes to securities premium. To securities premium account 1,20,000 into 1, 1,20,000. To share allotment balance 80,000. To bank account rejection 1,60,000. Being share application money transferred to share capital, securities premium and share allotment and excess refunded. Next, allotment due journal. Share allotment account debtor 6 lakhs. To share capital 4,80,000. To securities premium 1,20,000. So share allotment money 5 rupees including 4 plus 1 premium. Therefore 4 rupees goes to share capital. For 1 rupee for securities premium account. Being share allotment money including premium here due journal. Due means yet to be received, anticipated, not actual receipt. Now only we have to give how much amount will received. Here bank account debtor, this amount we have to find out. Calls in advance account debtor 80,000. Refer application. Here 80,000. This calls in advance received in application itself 80,000. Calls in arrear account. Here calls in arrear Mukti and Ruhi did not pay the allotment money. So refer working note 3 42,000 and share allotment account 6 lakh. Working note 3 and 4. Mukti and Ruhi filed to pay allotment money. First we have to calculate Mukti. Mukti shares. 6,000 shares were forfeited. Mukti belongs to category of 50,000 applicant to 40,000 allotment. So here 6,000 shares are allotted shares is given, then applications we have to find out. So he applied for 7,500 applications. So excess application received from Mukti is 1,500, that is 6,000 rupees excess application money. Here he filed to pay allotment money. Therefore, allotment due is 6,000 into 4 for share capital and 6,001 for 6,000 for security premium. So, already adjusted excess application money of 6,000 is first adjusted to share capital. Here we have to notice one thing. Excess application money is adjusted for share capital. So, 24,000 is due. Excess money is 6,000 received. Therefore, calls in arrear in capital 18,000 plus securities premium 6,000. Totally 24,000 due from Mukti. On forfeited 6,000 into 7, 42,000 shares were forfeited. Less calls in arrear is 18,000. Therefore, amount forfeited 24,000 for share capital. and then Ruki's share of calls in arrear amount. Application received 4,500 given. Ruki belongs to 90,000 applicant to 80,000 shares. Therefore, here applications is given. Therefore, how many shares were allotted you have to find. Allotted shares is 4,000 shares. So, excess application 500. Application amount is equal to 2,000. So, allotment due by Ruki. Here, excess application is 4,000 into 4 for share capital and 4,001 for securities premium. So, excess application amount is first adjusted for share capital. Therefore, excess application amount of 2,000 adjusted 16,000 you have to given less 2,000 for calls in arrear 14,000 plus securities premium 4,000. Totally 18,000 calls in arrear. His shares were forfeited. So forfeited 4,000 into 3, 12,000. Excess application money 2,000, then 14,000. So here calls in arrear forfeited. Mukti 24,000. Mukti's shares were forfeited. That is, he is given 24,000. Ruki is 18,000. 18,000. Here total 38,000 forfeited. Calls in arrear 42,000. So calls in arrear account 42,000 to share allotment 6 lakhs. Then forfeited journal. Share forfeited account data 70,000. Securities premium account 10,000. To forfeited shares account 38,000. To calls in arrear account 42,000. Share capital account data 70,000. That is 6,000 into 7, 42,000 and 4,000 into 7, 28,000. Totally 70,000 share capital. Securities premium not paid by allotment 6,000 into 1, 6,000. 4,000 into 1, 4,000. Totally 10,000. Then reissue. Bank account data 56,000. To share capital 48,000. To securities premium 8,000. Shares were reissued at the rate of 7 per rupees. 6 only called up. 6 only paid up. Okay. 7,000 into 8, 56,000. Being shares reissued at rupees 7 per share. Then forfeited account data to capital reserve 30,000, 30,000. Being share forfeited money transferred to capital reserve. See working note 5. To find out capital reserve, reissue of share 8,000 shares that belongs to Mukti's share of 4,000 and Ruki's share of 4,000. But Mukti's shares forfeited is 6,000 shares. So out of 6,000 shares, 4,000 shares only forfeited. Therefore, amount transferred to forfeited to capital reserve is 16,000 for Mukti. Here, Mukti's 4,000 shares were forfeited. All the shares were reissued. Therefore, amount transferred to capital reserve is 14,000. Total amount transferred to capital reserve is 30,000. Question number 24. Aman and Biswas were partners sharing profits and losses in the ratio of 3:2. They admitted Chetan as a new partner for 25% share. Balance sheet of Aman and Biswas was as follows on March 31, 23. Here liabilities, assets. Liabilities, creditors 50,000, employees provident fund 60,000, general reserve 40,000, investment fluctuating reserve 50,000. Investment fluctuation reserve 50,000. Here, Aman's capital 2 lakhs, Biswas capital 1 lakh 50. Total liabilities 5 lakh 50,000. Assets, bank 40,000, stock 60,000, debtors 1 lakh less depreciation less, provision for bad debts 10,000. Therefore, total debts 90,000. Furniture 1 lakh 20,000, building 1 lakh 60,000, investment 50,000, goodwill 30,000, totally 5 lakh 50,000. Chetan was admitted on the following terms. Market value of investment 20,000. There was a bad debts amounting to 6,000 and provision for doubts is to be maintained 9,000. Debts to be maintained at 9,000. Building was undervalued by 20%. Stock was overvalued by 20%. Goodwill of the firm was valued at 1 lakh and Chetan bring a share of goodwill in cash. Chetan was to bring 1 lakh 30,000 as capital. Prepare revaluation account and partners capital account. Revaluation account. To stock account, debit 10,000, to bad debt 6,000, by building account 40,000, by reserve for bad and doubtful debts 1,000 rupees. Therefore, revaluation profit of 25,000 was shared and Aman and Biswas as per working note. Here, working note 1, building value is undervalued 20% and given 1 lakh 60. We can understand one thing here. Given 20% undervalued, now 80% of the value is equivalent to 1,16,000 போட்டுட்டு 100% வேல்யூ எவ்வளோ வந்து கால்குலேட் பண்ணணும். 100% வேல்யூ இஸ் ஒரிஜினல் வேல்யூ இஸ் 2 lakh. 2 lakhsக்கு 1,16,000 40,000 increase in value, so it should be credited to revaluation account. Like that, stock value was overvalued by 20% given. That is, overvalued 20% now 120% of value is 60,000 is given. Then actual value 100% how much we have to find out. 100%. 100% is equivalent to 50,000 original value. So decrease in value 10,000 debited to revaluation account. So share of profit in the old ratio 3:2 divided Aman and Bis was 15,000 and 10,000. Then partners capital account. You know that partners capital account including after admission. Aman Biswas Chetan. So by balance brought down as per the balance sheet 2 lakh, 1,50,000. Chetan brings cash for 1,30,000 for capital. Then revaluation profit 15,000 and 10,000 is transferred. Then as it is accumulated reserves like that general reserve, profit and loss account, everything should be transferred to capital reserve according to the old partners and old ratio. So here general reserve is shared 3:2, 24,000, 16,000. Then investing fluctuating reserve. Here investing fluctuating reserve. Investment fluctuation reserve is 50,000 is given. Investment is 50,000 in asset side is given. But market value of investment is 20,000 only. Therefore, decrease in investment value 30,000. This decreased value is adjusted by reserve 50,000. Already we have 50,000 reserve is there. Only 30,000 is required. Therefore, excess 20,000 should be shared to the old partners in the ratio 3:2. That is 12,000, 8,000. Then goodwill. Premium for goodwill. So 15,000 and 10,000. Already existing goodwill should be write off through old partners and old ratio. What is an existing goodwill? The goodwill which appear in the balance sheet is known as a existing goodwill. That should be written off the old partners in the old ratio. Then arising goodwill, that is new partner is admitted, that premium for goodwill is shared to the sacrificing partner. Therefore, premium for goodwill is 15,000 and 10,000 is credited to Aman and Biswas. That is goodwill of the firm 1 lakh is given. Share of new partner 25%. Therefore, 25,000 should be shared according to the sacrificing ratio 3:2. That is 15,000 and 10,000. So here you have to understand this concept only. If they are given undervalued, given less value is given, therefore we have to find out the more value. Overvalue means they are given more value, excess they are given. Then given is we are Take 100 plus that rate percent. You have to take like that. இந்த கொஸ்டின் புரிஞ்சிருக்குன்னு நினைக்கிறேன். ஸ்டூடெண்ட்ஸ் கொஞ்சம் கவனமாக போடணும். அண்டர் வேல்யூட் அண்ட் ஓவர் வேல்யூட். Question number 24R. Akkum and Bakkum are partners sharing and profit and losses in the ratio of 3:2. Their balance sheet of the firm on 31st March 23 was as follows. Creditors, bills payable, employees provident fund, reserve fund, capital 1,60,000. Everything is given. Then total 3,10,000. In this asset side, cash 10,000, debtors 70,000, stock 70,000, plant and machinery 40,000, building 80,000, profit and loss account, that is debit balance is given 20,000, loan to Rajan 20,000, total balance sheet 3,10,000 amount. The partners decided to dissolve their firm. Here they are completely dissolved their firm. Assets are realized as follows. Debtors realized 50,000, stock realized 80,000. Akkum took away the machinery at an agreed value of 30,000. Bakum takes over the building at a valuation of 1 lakh and agrees to pay off creditors at a discount of 5,000. Unrecorded liability of 20,000 was discharged by unrecorded asset of 35,000 in full settlement. The expenses of realization came to 5,000 and were paid by Bakum. However, as per agreement, they were to be borne by Akrum. Here we have to see one thing. Unrecorded liability of 20,000 was discharged by unrecorded asset of 35,000 in full settlement. Both are unrecordedனால இதை நம்ம ரியலைசேஷன் டிசல்யூஷனில் ரியலைசேஷன் அக்கௌண்ட்டில் காட்டணும்னு அவசியம் கிடையாது. Just we have to ignore. So realization account. Realization account எப்படி ப்ரிப்பேர் பண்ணுறதுன்னு நமக்கு தெரியணும். First, all assets as per book value in the balance sheet should be transferred to the debit side of the realization account. Like that, all third parties liabilities should be transferred to credit side of the realization account first. After that, we have to make the adjustments. So if assets are sold or assets are realized, you should be credited under the get bank account. Like that, debtors debit side 70,000, stock 70,000, to plant and machinery 40,000, to building to account 80,000, to loan to Rajan 20,000 is transferred debit side. By creditors account 60,000, by bills payable 20,000, by employees provident fund account 50,000 transferred credit side as per the balance sheet. Now, debtor stock and loan to Rajan is settled by cash. Therefore, debtors 50,000, stock 80,000, loan to 20,000, totally 1,50,000 cash comes in. Then, Akkum's took over machinery as per 30,000. By Bakkum's capital account, that is he took over building 1 lakh. Here, Bakkum's capital, creditor is settled by Bakkum 55,000. Remaining employees provident fund and bills payable should be settled by the firm. Therefore, to bank account 75,000. So, realization gain is transferred to capital. Akkum's capital in the ratio of 3:2. 3,000, 2,000. Balance sheet of P, Q and R who were sharing profit and losses in the ratio of 5:3:2 as at 31st March 23. Here liabilities asset is given, creditor 50,000, employee provident fund 10,000, P&L account 85,000. Capital of PQR is given 1,35,000, totally 2,80,000. Here bank 40,000, stock 80,000, debtors 1 lakh, fixed assets 60,000, totally 2,80,000. Here P is retired on 31st March and Q and R desired to share profit in the ratio 2:3. The other terms on retirement was goodwill of the firm is valued 80,000, fixed asset to be depreciated 2,500, a provision for doubtful debts on debtors was to be provided 5,000. A liability of claim included in creditors for 10,000 is settled at 8,000 and immediately paid by check. That is immediately settled. The amount will be paid P in the following manner. Q will contribute 1,150 and R will contribute the rest by check. The rest they won't give the correct amount contributed by R. So we have to find this amount. So by preparing bank account and maintaining a minimum balance of 15,000 in bank account. Pause necessary journal entries and prepare balance sheet. This only here P is retired. So everything is we have to prepare evaluation profit or goes to all partners in the old ratio. Except goodwill, goodwill is shared gaining partner to retiring partner. So first, revaluation account debtor 7,500 to fixed asset 2,500 to provision for doubtful debts 5,000. Being decreasing value of assets and provision for doubtful debts. Then creditors account debtor 10,000 to revaluation account 2,000 to bank account 8,000. Being creditors discharged at a discount. P's capital account debtor 2,750, Q's capital account debtor 6,650, R's capital account debtor 1,100 to revaluation 5,500. Being loss on revaluation charged from partners' capitals in their old ratio. Then accumulated profits of debit balance of profit and loss account. Profit and loss account debtor 85,000 to P's capital 42,500 to Q's capital 25,500 to R's capital 17,000. Being accumulated profit distributed to all partners in the old ratio. Q's capital account debtor 8,000, R's capital account debtor 32,000, to P's capital account 40,000, goodwill shared according to the gaining ratio. Calculation of goodwill. Gaining ratio is equal to new share minus old share. New share of Q and R is 2:3 is given, therefore 2 by 5, 3 by 5. Old share is 5:3 is given, therefore 5 by 10, 3 by 10, 2 by 10. Gaining ratio is equal to P minus 5 by 10, Q sacrificing 1 by 10, 4 by 10. So gaining partner 1 by 10, 4 by 10, that is 1:4 gaining ratio. Share of goodwill is 80,000 is given. Retiring partner 40,000. That 40,000 is shared 1:4. Then Q's capital 8,000. R's capital 32,000. So here evaluation account. Fixed asset reduced to 2,500. To provision for bad debts is maintained 5,000. They are debited to revaluation. Creditors settled 2,000 rupees gain. So loss on revaluation 5,500 share P27 Q 1,650 or 1,100. Then bank account debt are 1,02,750 to Q's capital 1,150 to R's capital 1,01,600 being amount payable to be brought in by Q and R as agreed. Refer working notes. Fees capital account debt are 1,19,750 to bank account 1,19,750 being amount settled for the retiring partner. So here partners capital account due to retiring partner 1,19,750. Bank account balance brought down 40,000 to Q agreed to pay 1,150 by due to creditor settlement we get 8,000. Then B's capital settled 1,19,750. Then balance should be maintained 15,000 given in this sum. You have to maintain 15,000. So remaining amount B's capital 1,01,600 should be brought by B as cash. Balance sheet. Balance sheet after retirement as at 31st March 23. Assets and liabilities. Fixed asset 57,500, stock 80,000, debtors 95,000. Here liability, creditor 40,000, employees provident fund 10,000. As for capital account, Q 79,000 or 1,18,500. Totally balance sheet figure 2,47,500. Here also 2,40,500. Question number 26. On 1st August 2022, Rockstar Limited issued 40 lakhs 9% debentures of 100 each at 5% premium to be redeemed at 12% premium on March 31, 27. Balance in securities premium before issue was 1,50,000. You are required to pay entries of issue of debentures, pass entry for writing of loss on issue of debentures, pass entries for interest on debentures on March 31, 23 if it is to be paid on March every year. Prepare loss on issue of debenture account. Journal entries August 1, 2022. Bank account debt are 42 lakhs to debenture application and allotment account being application money including premium received. Bank account 40 lakhs, premium 5%. $42 lakhs. Then debenture application allotment account debt are 42 lakhs. Loss on issue of debenture account 4,80,000 to 9% debenture account 40 lakhs to securities premium account 2 lakhs. Premium on redemption account 4,80,000 being debentures issued at premium, redeemable at premium, redeemed at premium 12%. So 12% of 40 lakhs is equal to 4,80,000. Then interest is paid. Debenture interest account debt are 2,40,000 to debenture holder account debt are 2,40,000. Debenture interest. Debentures were issued 40 lakhs, 9% debenture. Interest is paid on March every year. Forty lakhs into 9% into August. August, September, October, November, December, January, February, March. 9%, 9 months only. 2,40,000. Debenture holder account debt are 2,40,000 to bank account. 24. 2,40,000. Securities premium account debt are 3,50,000. Statement of profit account debt are 1,30,000. To loss on issue of debenture 4,80,000. Being loss on issue of debenture, written off. Securities premium account 3,50,000. Here securities premium already 1,50,000 is there. On issue we get 2 lakhs. Totally 3,50,000 available in securities premium. So loss of 4,80,000 is adjusted, transferred to balance statement of profit and loss account. Statement of profit and loss account that are to debenture interest account 2,40,000, 2,40,000. Here loss on issue of debenture account ledger. August 1 to premium on redemption of debenture 4,80,000. Then closing by securities premium we get 3,50,000. Then transfer to statement of profit and loss account 1,30,000.